once you are looking into a chart, there are a lot of things you want to, it's just like you reading a book, right? So, and the book, the things you want to read now is price. What do you use to read those charts? You need your candlestick. And like you know, we are using Japanese candlestick. We talked a lot about these candlesticks, mostly about them, the reversal and the continuation patterns, different patterns, right? Which was our last class. If you don't remember anything about the last class, please, I will recommend you go back to the recorded video about these candlesticks and how you can use them to spot reversals, continuations. The name of these candles, they are very important. You can see we talked about hammer, we talked about inverted hammer, we talked about bullish engulfing, tweezer, bottom, so on and so forth. They are very important to you when you want to start to analyze the charts. Okay, the market structure. You know that when we spoke about market structure the last time, we said the market doesn't really move in a straight direction, right? So it's either it's going in an upward trend or it's going in a downward trend, and there is also a trend which we call which is just a trend that is stagnant, and that's when the market is not moving. So the buyers and the sellers, they are indecisive in the market, which in this case is not the type of market you want to trade. You want to trade when the market is either in the uptrend or is in the downtrend. So you don't want to trade when market is stagnant. Okay. So moving ahead to the topic for today. So the topic for today is introduction to SMC. We have key things that you need to know about SMC. So there are a few words that you need to get familiar with, right? We have few things that you need to get familiar with. We have what we call break of structure, which the abbreviation for that it's BOS. So BOS stands for break of structure. And the last time we spoke about market structure. So what do we refer to as a break of structure? So in fact, I'll go to my chart right now to give you an example of what we may see break of structure. So let's go trading view. So when we say break of structure, I'll give you an example in an upward scenario. So if you have a market that is going in an upward direction, when we say it's an uptrend, right? We say the market it's in an uptrend. So let me pick my test tool here. So market structure. My network is a bit slow, but we get going right now. So we say market structure, which we talked about the last time. So firstly, we have our market structure, and then we have what we call, so this is what, if we are in an uptrend, right, you see something like this. You see something like this. In the last topic, when we talked about market structure, we talked about this. But it's very important that all these concepts that I'll be making mention of, you start to grab them and know what they stand for and how you can. So when we are referring to them, you know what we are referring to, okay? These terminologies, right? They are very important if you want to do your analysis. It's not like maybe when you see someone doing analysis or they send a signal into a group, or if you are in either our sports main group or the futures group, you see a signal and it looks strange to you. You don't want that scenario in which you see anything that is strange to you in the chat, okay? So now, when we say we have when we say we have market structure, which is what I just wrote here, right? When you have market structure, this is what we are referring to. So it's our chart, which is in an uptrend. So this is an uptrend scenario. And what do we mean when we say uptrend? Market is going in an uptrend. Market is going in an upward direction. In fact, if I pick these two right here now, and I plot it all the way, you will see that it's moving in an upward direction, okay? And we have what we call our highs, okay? And we have what we call our lows, okay? So market in an uptrend, it creates higher highs and lower highs, okay? So higher high, market creates higher highs and higher lows. Higher lows, okay? So now, we know this whenever we see markets do something like this, so let me now illustrate this for you so that you can understand what we are talking about. When we say higher highs, okay? So for example, you see, we said market doesn't move in a straight direction, okay? So with this candlestick that you are seeing here, right? It opens. We talked about the body of it when we were talking about the anatomy of candlesticks. We told you where the buy candles and the sell candles, where they open and how they close. Okay, so all of these things they are all combined. Okay, so market will open. So now if we are in a 4 hours chart, we know that each candlestick here lasts for 4 hours. Okay, so now is each one of these candles now they now form a form like this to then create this type of structure in the market. So they open, they close, they open, they close, right? So whenever they open, that's when the market starts, right? At a particular time, they open and a particular time they close. So now imagine that this candlesticks open and in the next 4 hours it closes, right? If it closed below the amount that it opened, you know that okay, yeah, the price now is moving in a downward direction, right? It's going downward, right? So now they form now and they form something like this. So we refer this now as a structure. Now imagine that the candlestick now they form gradually as day starts till when the days right go till they open in the morning and it closes in the evening and it goes all the way like this, right? So now they form and they form something like this, right? When let's say for example when this morning the candle the market started like this and the price was up this way, okay? But then before market just started like this. It's not like it moved in a straightforward direction. It started to move gradually, and it started to break structures. Okay, so now if markets did something like this, right? They move like this, and we know it doesn't move in a straight direction. Uh, at a certain point, it started to go. it changed the direction from going upward, and then it started to go back down like this. Then all of a sudden again it started moving up again, and then it moved backward again, right? And then again it moves like this, and then it's forming like something like a structure, okay? But it continues to move upside. But there's something you have to note about this movement the market is doing, okay? So now imagine that it created this high, okay? It's created from this low, from this low, from this low level, from this low, it's created this high. Let's remove one of these, okay? Let's remove one of these. So we refer this now as a low, okay? The lowest price market was when the day started, and when the market started, okay? The lowest price when the market started. So after some couple of hours, it created a high, okay? So it got to a high level, and then it moved back down. Now we know that market has created a high. So now it's moved back down. This movement that this market just did from here to this upside is what we refer to as a high, okay? So if this market now should go back down, we refer to it as a low. So in fact, I will remove this high and just put a low on it, okay? So a low. Let's say now market started here with this low, got here to this high level, and then came all the way back here as a low, okay? So now do we all agree now that we have a high? We all agree now that we have a high, and then we have a low. But if we are going to look at it right now, if I should pick my trend line, okay, and I plot it right here, you will see that there's something that is missing here, okay? Look at this low here. This now, we can also refer to it as a low, okay? But this low compared to this low here is lower. So now, we won't be referring this low now, we won't be referring to this new low now as a low. It has to be it has to be a higher low, because this low is higher than this low, this previous one, okay? So here, this is why we call this place, we refer to this place, right, as a higher low, okay? We are breaking it down now. So we refer to this place now as a higher low, because why? This low is lower than this low. So do anybody has a question, or is everybody following along? Please, if you are following along, just drop the number 2 in the chat box. If you are following along with this dynamic, just type the number 2 in the chat box. If you are following along, it's very important that you understand this key step. If you are getting it straight, type the number 2. If you don't understand, type 1, please. Don't be shy, because this is the same thing that we are going to apply to our chat. And if you get this foundation, it's very solid, strong and solid. Okay, so now, okay, I'm glad that almost yeah, this is actually impressive. Okay, so let's go. So now we know that we have this low, and we have this high, and we have this lower high, right? But then what happened when market created this lower high? It started to move again all the way up, and then we had this high, but market now moved past it. Okay, so I'll pick my trend line now. What happened? My recent high now has been broken. So my recent high now has been broken. So now we now call this place now that market have shift structure or has break structure. But to keep it simple, I will call this place BOS, BOS, which stands for break of structure. Okay, so now I'll come back here. You know that we have our market structure, and the next thing we have now is our break of structure. Break of structure. So now all this terminology now are no longer new to you. You know what they stand for. break of structure. So you know that if you have once you see something that is called BOS, you know what it stands for, and you know why it's called that. Okay. So now, whenever a market breaks the recent high and then start to move upward, okay, we refer to it as a BOS, break of structure. Okay. So on and so forth. So market creates an impulsive move to the upside. And whenever it draws back, that is what we call a pullback. Okay, impulsive move to the upside, a pullback leg to the downside, and then it's now went up, took this recent high off, this recent high. So now here we call our recent high. You know the reason. So if I say a, a recent high, you know why I say it's a recent high, okay? So here, we label it as recent high. We label this place now as a recent high. We label this place as a recent high. Recent high. You know why we call this now a recent high? Because why? We have a new high, okay? This is our new high in the market, okay? This is our new high, and this is how market structure forms, okay? This is how market structure forms because why? You continue to see break of structure to the upside, okay? It will continue to take out the recent high, okay? And then for you to have a confirmation, so you know the last time we were talking about support and resistance, and we talked about something about having a confirmation that market broke structure. So for you now to have for you to have a verified market structure, you have to see candles close above. Okay, it has to break with the body. Okay, so for a break of structure to be valid, it has to break outside of it. Okay, so the recent high has to be broken, and it has to form at least 1 to 2, 3 candles. Yeah, it doesn't have to be a week. So if the candlestick that broke out of this structure is breaking it out with a week, what we refer to as a week is here. So imagine now, I can refer to something like this is a week. So this now, I can't, this is not a valid break, okay? So if market has created something like this, and then it closed out with something like this weak body, it's not a valid break, okay? So it's not valid. If it close out with something like this. So do we understand? So if you understand, just type a 3 in the chat box. So what I mean by this, so if market should break out of a structure with something like this, weak, what we refer to as a weak. When we talked about the anatomy of candlestick, I know you, I talked to you about the body of the candle, the wick, you know, the open and the close, you know. So if market should close, if a structure should break with something like this, right, it's not valid. It's just a fake out, okay? That's what we refer to as a fake out, okay? So let's assume in, I'll give you an illustration later, but what I intend to tell you is that if we have a structure like this, okay, we have a structure like this, and it's something like this, and it's did something like this, okay, this is a fake out. If it's just close with the wick of the candle, okay, it's a fake out. This is a fake out. It's not valid, okay. So this is not valid, okay? If something just close above here, the can effect, it has to close outside of it, okay? So, and now we go ahead and then we create this structure. This is a BOS. So we know that for we to have a valid structure, there has to be impulsive move to the upside, pullback leg to the downside, and then market has to break recent structure, okay? This has formed a structure. by creating a high, creating a higher low, and then breaking out of this recent high to create a new high over here, which is now our higher high. So now we'll refer this now to as our higher high. Why do we refer to this place as our higher high? We refer to it as our higher high because this high here is higher than here, this high. Okay? You see now we are no longer using just the high, we are using higher high. Okay? Because this high is higher than this high. This high higher than this high. So this place now automatically our higher high. And then this low, this higher low is lower than this. And this now is automatically a higher low. And so on and so forth. And this now we can clearly see its market is breaking structure to the upside. It's in an uptrend, okay? Uptrend. And this is an uptrend. Okay? This is an uptrend. This is how the structure would look like, okay? So we have other terminologies, but I don't want to rush us at all, okay? But then at least this terminology, you should know if I say my recent high, recent low. So if I say a recent high or a recent, so if I say my recent low now, what would be my recent low here, please? Can anybody tell me where would be my recent low here? You can unmute. Someone typed 3. Oh, okay, yeah, I asked you. So, can anybody tell me where will be my recent low?
The low that you have, capital letter H and capital letter L. Yes, recent low.
Recent low and this now will be the recent low from this low, okay? So now imagine that, okay, market is forming this structure, right? It's forming this type of structure. And you know that market is going in an uptrend. Now, you should be looking for a place of entry, right? So you know that, okay, now if market is in an upward direction, I should be looking for a valid entry, okay? But we'll still get there. Let's get familiar with this structure, how to draw this structure, okay? So now you know that for you to even place a trade in an upward direction, first determine the structure. So now with this, we've done something like this on here, okay? Now let's pick a coin so we can do experiment with this market structure alone, okay? This is the introduction to, I don't want to fast forward us even before I move on, but then let's just have an example based on what we just talked about, okay? So let's move to, so we always recommend that we do a top-down analysis. And we said for you to do a top-down analysis, for you to identify the trend, you want to go to a higher time frame, either the daily time frame or a 4-hour time frame. Okay, you can see my own setup from here. I have my daily 4 hours, 1 hour, 30 minutes, 15, and 5 minutes. Okay, and then we talk to you about how you can do all of this and put them to your favorites. When we talked about how you can set up your trading view, we still have that video. It's still very valid. You can go there and look up that video. So now, this we are looking at Ethereum, right? And in the 4 hours time frame, and I just currently zoomed out of this chart. Can anybody tell me what trend are we at on this chart, please? Can anybody tell me what trend we are at on this chart by just typing in
Trend, sir.
Good evening. Yeah, go ahead.
So we are the uptrend.
In an uptrend, okay. What do you see that makes you think this is an uptrend?
Okay, looking at it from an higher time frame tells us the particular trend of the market.
So what my question particularly is that what do you see that makes you think this is an uptrend?
We have recent. Can I come in?
Yeah.
We have recent higher low. We have as in low and higher, recent higher low.
Okay.
And we also have high and higher highs, breaking the structure above.
Okay. In fact, perfect, leader George. In fact, look at them. You have this recent low, and then the low that the market created again, it's even lower. You can see from here. Okay. So market is creating low, but it's lower than the recent ones. Okay. Market is creating lows, but it's lower than the recent ones. So in fact, and it has been also creating higher highs. Okay. We have a high here. We have a high. That was perfect. The first person that answered, and you are doing an excellent job. You can see, and if you pick our trend line right now and we connect these dots, you can see the market is in an uptrend. So up to this level, do everybody understand? Okay. So if we pick our trend line, we can see now that if we plot it up, it's in an uptrend. Okay. And if we are even trading price action, you can see that this price is still currently trading in this channel that we taught you about the last time. Okay. And this is a really great support level. We have a great support and a resistance. Okay. A great support and a great resistance here. Okay. So now we know the trend of Ethereum. Okay. So from what we talked about the last time, so now we want to draw the structure. Okay. So we know we have our highs like we talked about the last time. So now if I should mark it out and I say low, and I take my all these are not necessarily that much, but for we to get the clearer understanding, so lower higher lows, just to see the practical aspect of what we just did. And here also will be a higher low. And this is higher high. This is our high. Would say this is a high. And this high here, this high is higher than this high. Okay. This is our higher high. Higher high. I want to see you type the number 1 in the chat box if you are understanding what we are doing. And this is our higher high. In fact, and if this low now should get to this place, it's not lower than here, we'll have a higher low. Okay. We can not currently determine what it is right now because currently it hasn't really come anywhere near to here. Market actually created a low and it's lower than here. We can also refer this to our higher low. Okay. But this is in an 4 hours, and this is how you determine the trend. You come to the higher time frame, you determine the trend, and then you move to a lower time frame, like the 1 hour now, to now draw your structure. So now let's delete all of the drawings on here. Okay. Now we've deleted all the drawings, and we want to draw our structure. Okay. So now let's just draw the structure from this level. We are interested in this recent level. So now if I should pick my path to, and I take from here, and I go carefully with it. Okay. This is just pure market structure. How you draw your market structure and define it. So now you do something like this. You can see the trend will always be different from what it is telling you in the higher time frame. Note that overall time frame might be really bullish, and in the lower time frame it might be bearish. Okay, but then this is where the work starts. Okay, so now for you to draw the structure, you just have to first mark out your clear structure level. So now you can see this is where the market is currently at. Okay, so now I said for you to determine a structure, you want to draw you want to know where market broke out. Okay, so now for you to get it easy, So now you draw this your trend line. And here we can see clearly that this market created what? What did it create here? An impulsive move up to the upside. Impulsive move to the upside. A pullback leg. And it broke the structure here. It broke it to this upside. Right? And here we can now call this a BOS from what we taught you. BOS, break of structure. Okay. Now you know how to determine this. You can also see that from here also, market did the same thing from this low, pull back, and it broke the structure. And this is a BOS. Are we all understanding? Please, are we following? And this is a BOS. And we see that market did what again? It started to move downward. Okay. When it got here, there was a pullback leg, right? But then what did market do? This higher high, market now start to create lower highs. Okay, now this is a downtrend from this level, from this upside to here, market was bearish. This is a bearish trend, and I'll tell you. So this is a bearish trend. This is a downtrend. And we will define this clearly right now. So when market is in a downtrend, it starts to create higher lows. So if this is a high, this is a high. So now let's define this together. So if this is a high, what would this be? Can anybody type in the chat box or just answer? If this is a high, and this high here has a high that is lower, what would this be?
Lower high.
Oh, perfect. Yeah, George. A lower high. So now we know that if market is in a downtrend, it will create a lower high. And the low that is beneath it, this now will be a low. This now will be a low. This is a low. Then what would this be? If this low is lower. What would this be? Can anybody in the chat box, or let me see if there's something in the chat. Lower high. Yeah, someone just typed it, and that's really nice. Is it lower high? Are you sure?
Lower low.
Okay.
It can be lower high now because is the first low is higher than the new low.
It's going to be a lower low.
Lower low. That's correct. Lower low is correct. Okay. So now we have a lower low because it's lower than this recent low. Okay. And now we see that this now we can refer to this as a recent low. Taking the low now took this out now, and we have a what? Lower low. You can see how this class is so important and very interactive. This now is a lower low, and this now also is a lower low. So market is now breaking structure to downside, okay? It's breaking structure to the downside. And how do you draw this structure when market is in a downtrend? Market has to break structure. If market is breaking down structure, so it has to break the recent lower high. So here now will be our BOS. If you break the newer lower high to create a lower low, so now this is our impulsive move. This is the pullback leg. Impulsive move to the downside, creating a lower low, and a pullback leg to the upside to create a lower high. So now we'll draw our trend line from here on the last candle to the body of this candle here. And now here will be our BOS, break of structure to the downside, and so on and so forth. Do we all understand this concept? Do we all understand? You can see how it's simple. Do everybody agree with me that it's simple? So, and so on and so forth, okay? Do everybody agree with me that it's simple? I don't see everybody telling me that it's simple. So whenever you see that we drop signals in the chat, in the group, this is how we come about it, okay? This is how we come about it. So now, we see that, okay, so we talked about choke the last time, but then I don't want to go into it. I think by the next class, we'll get to break that down. So when there's a change in trend, okay, actually, so now, if market now from this downtrend, right, now broke structure, instead of creating a higher low, it broke the recent low. What then would we call this place? So we have another low here. We have another low. We have another lower low. Lower high, sorry. And the structure was broken to the downside. Right? So now, something happened, and you can see that the market is going upside. Okay? So now there was an impulsive move to the downside, pullback leg to the upside, creating a lower high.
Excuse me, leader. Please excuse me.
Yeah.
I thought this break of structure should be low.
I don't understand.
It's now. I thought you should be drawing it in hand from this down now to the line it broke. That is breaking the support downwards now, right? Hello, can you hear me?
I can hear you.
I thought the break of structure would be happening down, as in on a downtrend now.
Yeah, we are drawing it on the downtrend.
Hello?
You mean to draw it below here? I don't get
Okay,
your
what
question.
I mean, look at this hand from there, and it broke it down. Like
No.
where you go. Can you hear me?
Yeah, I can hear you.
Can you hear me?
Yeah, I can hear you. I can hear you clearly, Judge.
Hello, can you hear me?
Yeah, I can hear you. Maybe your network. I can hear you clearly.
This place, look at it, the first low.
Yeah.
The first low. Can you come to the first low?
Yeah, this one.
Hello,
This
can
low.
you hear me?
I can hear you. This low here.
And this low now, the low. I thought we have to draw it to the right.
No, actually. You have to draw it above.
Okay, it's very.
Hello, Leader George, can you hear me?
Network has thrown him out. Please continue.
Yeah, in fact, I can see that. So now you can see now we have the structure now that broke to the downside, right? So there was an impulsive move downward, right? But then all of a sudden, there was this impulsive move upside from here. There's this impulsive move. So there was this impulsive move downward. Okay. And there was a pullback leg. But this pullback leg now broke this structure. So creating this new high. Right? And there was this impulsive move back to the downside, okay? Which now created this. But then if we now decide to draw our trend line, and then we draw this upside, right? And we connect. You can see that if you check clearly, if I zoom out, right? Okay, if I zoom out and if I draw this break of structure, right? This structure that was broken to the downside, if I draw it now, you can see that there is this candlestick, right? There is this candlestick here. Let me circle it so that you can see clearly. From the concept I was telling you the last time, I said for you to have a confirmation break of structure, it has to close outside this structure, at least with 1 or 2, 3 candles, okay? So now let's say this candle here, okay? This candle, let me delete this. So this candle closed, this first candle here, this green candle, can everybody see? This first candle that broke out of it, this structure, right? It's this green candle, this green bullish candle, but it closed with this wick, okay? So we cannot consider this as a break, okay? But then there was this candle that followed it again. It's a bearish candle, it closed below it. Then again, in fact, that area was a level of resistance, okay? So it created another new candlestick, it went down. Created a new candlestick, it didn't close. But then look at this candle here. Look at this candle. This very candle here, I believe you can see this candle. This bullish candle closed, but it didn't close all outside, still closed with a wick. We cannot consider it as a structure that has broken yet, right? But if I should draw my but if I should go to a lower time frame, like 30 minutes, sorry. So now, we can see that this candle clearly closed outside of it. Okay, this closed with a wick, but this here closed outside, okay? And there was this pullback leg to the downside. There was this pullback, and we have this main break outside. So now, if we connect from here to here, we can see the candle now that now broke this structure back upside. Breaking not just one structure to the upside, but multiple structures to the upside. Look at. So we have this down this block, this, and this one. Just this one candlestick now broke all of this all the way upside. You can imagine. And now, leaving this gap, here, leaving this big imbalance, and this is what we call imbalance. Okay, and this is when you know that institutions has joined the market. Okay, so we talked about imbalance the last time as well. So this is where we refer to as imbalance. Okay, for you to spot your imbalance, the last time we talked about imbalance, I gave you a clear definition, and we are still going to talk about and emphasize on it on our next classes. Okay, so we said for you to have an imbalance, you have to first spot your institutional candle, and this is your institutional candle. And for you to have your institutional candle, you have to have a candlestick. You have to have 3 Marabusu candlesticks. Okay, in which in between these two, in between the 3 Marabusu candle that will form, right? The gap between the first and the third candle is what we refer to our imbalance. Okay, this is where we refer to our imbalance, and price will always come back to this level to recover it, because it's a level of manipulation where large orders are being placed. In fact, if we were looking for a great signal from here now, we have another block right below here. Look at, and price is going to definitely come here and tap it. Okay, so now to our next, so this now, we call this imbalance. Okay, so the next terminology we've learned about today, we've learned what was our high, we learned about what is our low, we know what's our high, we know when market is in a downtrend, and we know what is an imbalance. So imbalance is an area of manipulation, or an area where the institutional place high order to manipulate price, to then pull that price back to where they are willing to, where they place their large order quantity. So let's go back to the slide that we have. Our slide. So what is smart money in trading? Smart money refers to the capital controlled by professional traders, institutionals, banks, and hedge funds, the big players who often move the market. How do they move the market? Smart money, big informed capital. These players buy low and sell high using deep market knowledge. They often move the market before retail traders notice. Okay, they will move the market, they pump in a lot of liquidity into the market. Okay, so smart money leaves footprints like this one that we just saw on our chart. So like this, what we just saw on our chart. So they leave footprint, and you can see one of their footprints here. They leave imbalance, fair value gaps, okay, which are confluences that we always look for when we are trading smart money. So the institutions, they pull price. Look at now, they did this, they pulled this market upside, right? This is not the intent. The intention is to push the market high. So the retail trader like me and you will believe, this market is really pumping, we buy. And then, but then they are placing large orders below here, which are footprints that they are leaving in the market, when they join. And when you are able to trade along with smart money, the big guys in the market, which are the big players that we are telling you about right here. These are the big players that we told you that we're talking about, big informed capital, okay? Yeah, they are the hedge funds, the banks, right? They place huge orders in order blocks, okay? And which at times they fake liquidity with fake outs, okay? So institutional order flow and market makers. Institutional order flows refers to the buying and selling of large institutional, like the banks, hedge funds, proprietary firms, and large entities in the market. Okay, we trade large volume. So on Ethereum, this small place that you are looking at on your chart, for them to pull something like this, okay, this is like millions and millions of money. Get used to that. This for them to just pull something like this imbalance that you are spotting here, for them to pull up just this long imbalance you are looking, these millions and millions of, and if you are able to catch one of these moves, this market is still going to go high. It has a trading in a downtrend. It broke this structure with this, right? But then they are still having orders left, and you can also see here now here there is another imbalance here. But then this is where the market is systemically to come, right? And whenever it gets to this other block, they skyrocket it. This is what is likely to happen here. So they create this imbalance, pull this market here, pull back leg, nothing actually. Now it's going to come down here, pick this order, and all you see is Valhalla. Okay. So for the topic for today, to the introduction of the smart money, we've touched some concepts, the BOS. From our next class, I actually stopped here. I don't want to talk about the OB or the imbalance or the fair value because we are still going to get to all of those topics and we are going to talk about them. So if anybody has any question, just drop them in the chat box and let's move ahead. If you understand what we talked about today, type 1 in the chat box. If you don't understand, type 3, please. And if you have any question, you can type or you can unmute and ask your question. So do anybody has any question? Wow, this is absolutely amazing. This is absolutely amazing. We have like 19 people in the chat. Please type 1 if you understand. Osana said they understand. Osana said FX. Okay, that's nice. That's amazing. We have leader George also. So the other guys, please don't you understand? If you don't understand, don't be ashamed. Just type 3. Let me know that you don't understand. Actually, we are time conscious. We should be rounding up the class very soon. Actually, right now. So if you have questions, just ask so we can briefly talk about it. 3, Chigozie Joel. So Chigozie Joel, please, can you unmute and tell us what you don't understand, please? Maybe briefly, I can just answer just only you to give you just a recap on it. Chigozie Joel, please, if you can unmute. I'm really seeing a really nice setup on Ethereum tonight. I might even take this trade. Chigozie Joel, please, can you unmute? If you don't understand, I'll just briefly explain to you what you don't understand before we call it a day. Or you can just type, leave. All right. If there's no other question, I believe this Chigozie has a question, but it's not responding. I say you can just type or you can unmute so you can let us know what you don't understand. Can you unmute, please? Let's know what you don't understand. Chigozie, go ahead. Please, you can unmute. All right. If there's no other question, we'll be calling it a day. So,
I've asked him to unmute, so I don't know if it's like he didn't get the It's like a,
So I got this, and your network actually was breaking. So now, if there is a break of structure to the downside, you don't draw from beneath, you draw from above. Because why? You have your high that the market is creating, right? Your lower high, right? You want to draw your break from the recent lower high to the body of the candle, okay? Not from the lower side.
sorry, I didn't get that. I didn't get that.
You will draw from the recent lower high to the body of the candle that precedes it. So now, this is your impulsive move to the lower side, and the pullback side is always upside. So the pullback leg is always upside. So now you want to draw from your recent lower high to the body of the candle that precedes it. Not from here to here. No. I hope I was able to answer your question. You don't draw from the lower lows. You draw from the lower high. Now, George, are you there? I think your network. All right. So as we all know, we have our classes every Monday at the same time, 8:30 p.m. Please don't miss any of our class. Today, this is the end of the class. If there is no other question, we'll be rounding up the class right now. And I wish everybody good understanding from our upcoming classes and also today. And I hope that what we learned today is useful for us in the future, and we're able to apply them to get better in our classes. If you really want to get better in most of these topics that we're talking about, it's about practice. You will always get better when you do more practice. And in that doing, you get to get ahead in the trading space. So good night, everybody. See you next Monday, or see you tomorrow, actually, in our class tomorrow. But for the technical part, we meet on Monday. Good night, everybody.
That's everyone.
No, thank you so much, Davila.
Thank you.
Please just invite our bye.
Thank you.